Hi, Richard here on December the 14th, which is a Tuesday, early afternoon, 3 p.m. And I wanted to look at the relationships of materials and materials stocks. Starting off with the industry sector chart here. You can see that we're technically still under wave 4, meaning that wave 5 is always the completion wave, and that the possibility of the March low being taken out. Now obviously we're a long way from confirming any of that. However, if you look at the retracement from May 2008 from March 2009, that is the GFC, then this is the 61.8% relationship. We first touched it way back in November 2010. I say November, that is actually January 2010, and then it came down in this ABC correction before in mid 2010 starting to push up again, and indeed that relationship has not ceased as yet. It has gone beyond the 61.8, but that's fine, it can. The market force indicator has lost a little bit of relative strength. The internal strength that's measured as a part of this indicator has been lost, so therefore we're on the lookout for any reversals. Ideally, in a candlestick sense, if this right hand candle was taller, this is a classic continuing candlestick pattern, very reliable one, where you get strong update, pull back 3 bars down, and then a long bar up on the right hand side. So I think that in fact is signaling continuing. If we put on a extension to get a feel for where the I'm just going back to front here, where the materials is likely to reach, well, we can also extend out these wave relationships. So 14,764 could be a reasonable target. So the way to trade these market forecast signals in light of that is that we do nothing whilst we go to light green. This is signaling the potential of a trend change, but you can see back over here in July and September last year, in fact it went light green for an extended period. Well, we stay in the trade in those circumstances, and then we add to the position when we get a solid green again, because we know that strength has increased and we've got a new high on the bar from the previous bar, meaning that the trend has renewed its uptrend, its upswing. So indeed, we had a heavy sell-off here. Well, it took a number of bars to indicate that we should go short, and indeed, given that this would have been a trend line running up here, it would have simply meant that there would have been no short trend, because we would have been waiting for a breakdown of that rising trend line if indeed we put one in there. So that's the setup for the indice itself. Here's Riversdale. This has been an absolute darling. You can see the market force at work here, where we got a nice upswing at the late last year into early this year, and then the trend strength slightly eased. Got a couple of solid bars as it found support, tracking above the 50 moving average all the way. A couple of bars short, which was in line with the materials industry geek on the previous chart, and then of course a couple of bars, a couple of weeks indecision, and then each bar represents a week of trading, and north it went. So fantastic trade, this one, from $10 to $16. It's been an absolute darling of the market, but it's now hit this overhead resistance, so unlikely at this point, unless there's some real pressure to force that through, and clearly there's not. It hasn't blasted through. We'd look for a pullback, probably in an ABC wave 4, and then if indeed early next year we go into further strength, $20 is a fair target. Incitec pivot, not much to say here. We're long through this period, but it's a grinding uptrend. It's in a holding pattern now. we just sit that one out. That's not on the horizon. Here's BHP. This is a daily chart where the previous ones have been weekly. You can see the market force and work down here. Very nice short signal before it found support, turned around. We're in a holding pattern, flat for a little while. Market gapped up, which in fact BHP has a habit of doing. That's a pretty tough gap, that one, to cope if you're on the short side, but hopefully the stop would have got you out there. Mind you, you'd probably need a guaranteed stop, but the short of it is that the market's gone long, and you know, the target is this rising trend line at around $47, $48. You know, the possibility of the previous high at $50. This is a major level here. You know, if it does blast through, then definitely $50 is on the cards. But at this point, the first target is $47, slightly below perhaps. Looking at Amcor, overlapping, sideways trend, flat, not a stock that would want to be in unless you got it in your super portfolio or a long-term hold. But you know, has shown some bullish characteristic just recently, even though we've got negative strength on the market force. Here's a breakout by Sims Metal, $20 stock, and you know, found support around the sort of $15, $16 mark. See the impact of the market force, absolutely nothing for the best part of this year, since March, where it suggested we go short for this run down, and that's not a bad trade. $8 in that leg, and then a fair bit of indecision as it went flat. So the target for Sims would be, I would say, this previous support would be the first at 23.50, following that up around 25.40. We could measure it with the Fibonacci just to get a handle on that, as we take a line, and that's 23.88, so sort of somewhere around the $25 to $24 mark. 23.88, $80 mark would be a fair target for Sims. Rio Tinto, very similar chart. This is the weekly, whereas BHP was a daily. But you know, very nice long signal generated by the market force. 1 bar of light at the moment. Stay in the trend. The target would be 95.50. You know, a nice round target of 100 if things are really going gangbusters. But certainly this upper trend line has acted as resistance in the past and likely to again. A nice safe target would be around that sort of 95.50. But if you're staying in the trade, then really it is getting very close to $100, which you'd imagine could be hit. One Steel has been a short trade for some time, but really sideways. There's not much joy in that at all, only $1 or so movement in there, one that we'd leave alone. Orica, really in the same camp. Since September last year, has done nothing but go sideways, so all you're doing is collecting dividends, and indeed the market force is suggesting we're flat as well. Mincor, just testing now the bottom of its channel, which is run since November 2008. The opportunity there, in the event that the broader market does run, is to see a bit of interest generated in Mincor, and for it to run up towards $3. So you know, the possibility certainly exists, but there's no action as yet, so we just sit on that one. Cargra, zinc. Zinc's an interesting one. That's why it's in this this run of the material stocks. It's worth watching because it just gives a bit of a bellwether as to what's happening in a non-gold, non-silver market. So really, you know, there's just a faint wisp of heavy red on the market force there, but this is flat. It could well trade off from 80 cents back down quickly to sort of 48, 50 cents. James Hardie, been really in a downtrend for so long, and all of a sudden came to life 3 weeks ago, broke out on a big upward candle, big volume spike, and it's still tracking up. So the breakout is usually a pretty good entry, $6.70, pushing up towards $7 to begin with, but look, it could well be a wave 4, meaning that 5 will peel off and push down again. You know, there is that distinct possibility, but I think this trade will be determined by the market force. We'll let it guide us as to whether or not we're long, flat, or indeed short. The only three options that are out there. Well, here's Fortescue, another darling. If I stretch that out, you know, it's been a particularly bold move. The market force gave us an indicator to go long based in the 9th of August after all this sort of sideways mess was out of the way, and it peeled up. So from $4.40 would have been a reasonable entry, and then, you know, exit on key resistance at 665. That was really the likely course of action then, and then you can see for a number of weeks now it's only gone sideways. So the first spike to the overhead resistance at 650, 665 would have been a fair thing there to really profit nicely out of Fortescue. And I think finally this is Boral. Going sideways, has been in a nice downtrend for a while actually, and then spiked back up to retest major resistance at roughly just below $5. Pulled back, spiked up again just over the last couple of weeks. Not a lot of commitment in this. You know, really I would think that there's more a short opportunity in it, and in the event that this 50 moving average and the major 5 round number, together with a change in market force to short, you know, could well see a test down here around the sort of $3, possibly even lower mark. Lumina, there's one more here. Lumina's been a good trade too. Great support, previous long-term support on a channel that's rising up nicely. Signal to go long, $1.90 odd. Even if we got in here at $2.06, you know, you can get a reasonable number depending on your equity and your money management rules. But you know, $2.30 has been a long-standing target on this stock. Could push up a little bit higher and hit the overhead resistance there, but to exit with a nice profit based on a $2.30 target, I think that was an initial Fibonacci target, and there's the second one up at $2.45 would be a fair thing. So that's the overview from the materials sector. You know, the couple of trades in there, really Riversdale is done. I wouldn't be getting in there. BHP is still pushing up. Not much left in this particular run, but having said that, BHP can get legs under it. So if it does break through the 47, then 50 is a fair thing. And of course, you know, Rio is in that same, but they're big ticket stocks to get hold of. Okay, for more information please go to themarketforecaster.com.au.